continue our conversation on results. This one is Suprajit Engineering. Ajith Kumar Rai is joining us on Suprajit Engineering. Mr. Rai, morning, afternoon, thank you so much for your time. Talk to us about how the domestic and global end of the business fared this particular quarter, and what kind of improvement are you expecting in coming quarters?
Good afternoon, and thank you for having me on your channel. On the domestic side, I think we had a very strong performance. Our domestic cable business grew, and the margins remained stable at around 17-18%. On the Phoenix Lamp side, we had again had a growth quarter, despite the fact that LED is penetrating into the OEM markets, and we had a double-digit margins for the second quarter in a row. So that's a very good improvement at the Phoenix Lamps division. Similarly, our new division, the electronics division, had a stupendous growth, although from a small base. And within the first 4 quarters of its operations, it has gone into double-digit margins. So the domestic markets have been fairly strong. The margins have been very good. On the Suprajit Controls division, I think our global business part of it, you have seen the kind of disruptions globally. Recently, Red Sea, a few months ago, the UAW strike. All these things have had its effect on the performance, and added to that some of the issues relating to relocating our plant in China, the issues relating certain duties in Mexico. They were all had certain effects. So that business has not grown, and the margins had somewhat declined for the quarter. But we feel that given another couple of quarters, that scenario will change when the growth is coming back, as we have informed. We have won some solid new businesses. A single largest business has been one of 5 million in a year, which is the single largest one by us in our history in our controls division. When these businesses go into production, we think that the growth will come back in a strong way, as well as the margin improvements. So overall, I think the 3 of the 4 divisions have done exceptionally well, and controls division is on an operational level has done very well. But on a margin improvement, we have got a couple of more quarters of work to do, I think.
So 3 out of 4 divisions have done rather well. Controls division is also expected to come up in a couple of quarters. But when that does happen, Mr. Rai, what would your picture look like in terms of margins and top line when the controls business also started firing up?
I think given few quarters, I feel that the new contracts that we have won in the last 12 to 18 months also will start going into production. Some of them already, but it will accelerate in the, let's say, second half of next year. So that will bring certainly a tailwind, not only for the top line growth, but also on improvement in margin. So the target is, obviously take our controls division EBITDA margin to double digit. We are at about 6-7%. I think once that happens, which is a larger part of our business, the overall margin of the group also will go back to our historic levels. That's what we are expecting to happen over the coming quarters.
Point taken. I also wanted a quickly word from you on the Red Sea disruptions. What kind of impact is it having on your business, margins?
Unfortunately, we are all single sources to most European and US customers with whom we do business. And what has happened in the Red Sea issue is that the ships are all getting rerouted via Africa down south. And it is not only taking 3 weeks of extra time, but also steep increase in container costs. The container costs have gone up, I think, 6 or 8x in the last 1 month. So that's a huge cost. And the bigger problem is that some of these ships have not reached the port. So some of our customers are having shortages. So we are doing airlifting of the material at an extremely high cost. So this is also adding to our big problem. So overall, the impact is pretty significant. But of course, our P&L is so large, I think it will absorb it in a reasonable way. But it will have a material impact on our exports from India to Europe as well as US.
Mr. Rai, your current margins are 12%. Can we assume that Q3 will actually see the peak of the worst of this Red Sea issue, and then sequentially things will gradually start improving, because airlifting means higher cost, and even 3 weeks is also more time means higher costs.
Yeah. Red Sea is I don't know how long it's going to take to resolve it. I think there is a much larger political issue here. So we hope that it gets resolved. Otherwise, of course, now the ships have started going via Africa. They're all starting to reach. Some airlift is going on. It's the question of cost of shipment, which is fortunately for us is an important part, but not a very significant part. So it will have some impact, but I don't think it will have so material impact on the overall balance sheet or the P&L of the company.
Before I let you go, I wanted a word on your expansion plan, because you do list out that you're looking for additional land parcels, plus you're assessing certain global assets. Talk to us about what's the strategy there, and when you're looking at global assets, what part of the business is it, what kind of scale that you're looking, what kitty you have ready in terms of making these inorganic acquisitions?
I'll answer the first question. I think we did acquire a land parcel recently in Q3, and we are assessing more because, as you know, Suprajit is growing pretty strongly, both domestically as well as for exports. So we think that we need additional land parcels. So other than what we acquired in the last quarter, we continue to look at opportunities to buy some land to put up our new facilities. As you know, STC is working on quite a few new exciting projects. We have to house it somewhere. So we are looking at these places to do some of those work. In terms of global opportunities, I think, with all this, again, we talked about Red Sea. If you look at the Red Sea issue, now customer will start worrying, if you have to import from China or India on a long-term basis, is it worthwhile if such issues come up again and again? So nearshoring also becomes an important part of the strategy of customers. And then we'll see nearshoring. What is the nearshoring good cost base for Europe? Or what is the nearshoring for a North American market? So these are the kind of questions customer is asking. We are trying to answer that and see if there are assets which make sense for us, which are cost effective, value for money, and have these advantages of servicing the customers. We probably will look at them at an appropriate time.
Excellent. Thanks very much, Mr. Rai, joining us on the show today.
Thank you very much.
Ajith Kumar Rai of Suprajit talking about numbers and also a glimpse of how the business model could actually shape up from here on.